Hey guys, this is Mark from TRADEPRO Academy, and in this weekend's video, we're going to talk about fundamental analysis versus technical analysis and which one is better for you. So grab a cup of coffee, a pen, and a notepad, and let's get at it. All right, Trade Pros, so welcome back, and let's go ahead and get started with this discussion. So when new traders tend to enter the marketplace, when they start looking to trade and get educated on the different styles of trading that are available, they tend to jump into one of two schools of thought. And those schools of thought are either fundamental analysis, using fundamental analysis to derive trading ideas and executing on those, or using technical analysis, marking up charts, using historical patterns, and looking at qualify and execute trading ideas based on past market movements in order to qualify future opportunities. So there's a big debate into which of the two is better. So I thought, why not go ahead and make a video discussing some of the benefits of each one, who can use it, and which one might be better for you. So let's go ahead and get started. First and foremost, fundamental analysis. Fundamental analysts are basically people looking to derive an intrinsic value of an asset, whether that's a stock, currency, treasury bond, etc. Anybody that's trying to derive the intrinsic value of an asset and making investing or trading decisions based on that intrinsic value that they find. So a fundamental analyst will look at a whole variety of information. Where it comes to a company, a fundamental analyst will look at future forecasts, will look at the balance sheet, cash flow statement, is cash flow coming in? We'll look at the stability of the leadership within the company. We'll also look at the sector, the environment, the competitive landscape of a company. Also, we'll look at geopolitical concerns, any countries that the company is involved in, that has operations in. If there's any political turmoil happening in those kinds of locations, such as offshore locations, that might also affect what the intrinsic value shows. But in general, what a fundamental trader will do is they will look at a whole bunch of statistics, economic reports, economic forecasts, like I said, geopolitical landscape, etc., to derive an intrinsic value for an asset. And then based on that intrinsic value, they'll look at what the current traded price is. And if the current price is higher than the intrinsic value, that would offer the fundamental trader an opportunity to short the stock. Alternatively, if the intrinsic value, or rather the current market price, is below the intrinsic value of that share of that company, the fundamental trader will look to buy that company and hold on as it appreciates back to its intrinsic value. So fundamental analysis does carry a purpose. More so, fundamental analysis, in my opinion, is better suited for longer term traders. This would be position traders, even investors, because in my opinion, fundamental analysis, a lot of what's happening and what's projected to happen is not so much a short term kind of analysis. Fundamental analysis, in my opinion, it looks out at least a couple months down the road, 2-3 months at minimum, to 6 months to a year for a fundamental analysis to start coming to fruition. And this kind of drives me back into our second school of thought here, which is technical analysis. So different than a fundamental analyst, what a technical analyst will do is a technical analyst will basically look to use historical market patterns, will look at historical data, historical market trends. We'll also look more so for timing purposes, identifying overbought and oversold extremes, and looking to capture opportunities based on reversions back to the mean. All right, so whereas a fundamental trader that uses fundamental analysis can look to trade based off of their analysis, more often than not, fundamentals, if you're sticking strictly to a fundamental analysis approach, you're likely going to be more of a position trader, more of an investor, looking to pick up assets or sell assets for the long term, for duration anywhere from 3 months or so up to a year plus. Whereas a technical analyst will use charts, like I said, we'll use historical market price, historical market trends. We'll also look at overbought and oversold extreme conditions. and look to use support and resistance, supply and demand levels in any areas where there has been previous buying interest or selling interest that's created an imbalance in the markets. Technical analysts will look to take advantage of that, and they'll look to read the psychology of the markets. This can be done using range bars. This can be done using candlesticks. What they do is essentially use the charts in order to come up with a trade idea and to execute on that trade idea. So fundamental analysis is more so for the longer term, is looking for overvalued or undervalued assets and looking to pick those up in order to appreciate, get capital gains on that front, or they could look to potentially sell out of long holdings if they see that the intrinsic value is greater than what the current price is currently at. All right, so whereas fundamental traders will look from a longer term, technical analysts will focus more so on the shorter term. These are generally your swing traders, your day traders, even your scalpers. These are the type of traders that tend to use technical analysis, because the whole purpose of technical analysis is to look at the psychology of the market, look at the historical patterns, and to find something that's repeatable that you can identify on a recurring basis and execute on. So that being said, technical analysts will look to time the market. They'll look to time their entries and their exits based on historical market context, whereas fundamental traders, they won't really use technicals in the sense that they have a defined entry and exit point. It's more so getting in when the market is overvalued or undervalued and looking to hold on to that until you get the capital appreciation. Or if you're looking to short sell, you're looking to buy it back at cheaper prices if you believe that the intrinsic value is lower than what the current price is today. So that's how fundamental traders will work. Technical traders will work based off of technicals, support and resistance, moving average, etc. So now that we've covered that and you have a better idea of what a fundamental trader is and what a technical trader is, which one is the best for you? Well, in our opinion, it really depends on your style of trading. Like we said earlier, a position trader, an investor, will likely benefit more from a fundamental approach, whereas a short-term trader, a swing trader, day trader, scalper, will benefit from the technical analysis approach. This approach basically assumes that any new information, any market moving potential information that fundamental analysts look for, technical analysis assumes that that's already baked into the price. All that we care about is price and volume and going from there. So which one works best for you? Like I said, depends on the type of style you are, but the best strategy is to have a mix of both of these in your personal analysis and within your strategy. The reason why is because having an underlying idea of what the general market should do can help, especially with technical analysis, because with technical analysis, you can locate good entries and exits. However, if you have the fundamental analysis as well, if you have an idea, or you know, for example, if you're trading currencies, that the US dollar is weak at the moment because of geopolitical reasons, then you can hold on to those shorter term positions and turn them into longer term positions. That is really the benefit of having a happy mix of both of these styles under your belt. So again, fundamental analyst and technical analyst doesn't necessarily mean you have to choose one or the other. The strongest and the best types of trades and the best types of traders typically tend to be the ones that focus on both of these, harmonizing the fundamental side with the technical side and bringing that into a single strategy that helps them extract market money utilizing high probability, low risk setups. So I hope you guys enjoyed this video. If you did, make sure to smash that like button, make sure to comment, make sure to subscribe to our page, and check out that notification bell to get notified anytime we drop any new videos or anytime we go live. Until next time, guys, good luck and good trading. Take care.